Hey, welcome everybody to the 40 Finance channel. Doing a little earnings check-in here, coming out of the gate on Wednesday, and it is a big green day in the market. So you got S&P over 1%, Dow close to it, NASDAQ 1.6%, huge day for the NASDAQ. And look at the Russell 2000 all of a sudden, 1.64% up today. And before I say this, I was going to say it's been a nice trend over the past several days, and it has, but you're still coming off of some pretty high points not even a month ago. Trevor Johnson, how you doing? Thanks for checking in. But all in all, regardless of the Russell, which has just been beaten to tatters, this is a huge day for the market, and I like to buy on red days, so I'm kind of mixed. I'm glad to see the bounce, though. I think we all needed a bounce. If your portfolio looks anything like mine, you could definitely use a bounce like this. And for me right now, even though it was a green day, I came to the conclusion after some more research last night, just reading, going through things one more time. I did end up buying a small bit of PayPal at 120 today, and normally I only buy on red days. I would have bought more, but it was a green day. So I just bought 10 shares and need to lower my cost basis because I was at the 190 level. So I'm hoping to buy roughly 25 more shares over the next couple months or so, depending on how the market acts. I think that I can't promise you that 120 is as low as it could possibly go, but I do think that we're in a stretch now where we should start to see some positive momentum for PayPal. And I think that if you're considering it, or if you've ever considered it, 120 is a good price in the sense that it's a cash-heavy company, and they've got a lot of different options. And that's where I started to turn the corner on making a purchase, is just thinking through it last night, like, hey, this is a company that did stock buybacks last year. They don't have anything on record yet for 2022, but we could see stock buybacks. We obviously... they fiddled with the acquisition of Pinterest, and I, for one, didn't really care that they didn't buy that. Wasn't so sure how that would work. But there's acquisitions. There's a lot of different things. So while I'm down, I'm sort of negative sentiment in the sense that they are coming out flat on earnings this year. I started to come to the realization there's a lot of other ways that PayPal stock can go up with beyond just earnings, right? And I think revenue is in a good shape. It should be double-digit growth by the end of the year. All right, what's up, Lion? Good to see you. Lion's all in on Facebook. I assume Facebook bounced today. I've only been looking at stuff at the high level, so let's dig in. Let's take a look. 231, 5%. Great day for PayPal. And like, that 5-day stretch there on this chart, it's really not that bad. Obviously, you're going to have the steep decline off of earnings, but it looks like it's settling down. In fact, on a broader view of 1 month, you can start to see this, and that's what I'm hoping to see on the PayPal side, hopefully sooner than later. So I think on Facebook we were 1 month. So Facebook had a better curve than this one does. But I do like this 119, 120 mark. I don't think it's a snapback, to here. But anyway, just sharing my thoughts kind of out loud. You can see some other stuff off to this. You had Shopify's back over 900. You got Square back to 110. Certainly influenced by the Bitcoin. Let's see where they're at. Bitcoin, I think, is well above 40 now. Yep. Heading to 45. I would say I feel really good about Bitcoin in the 40s as a stable place, but I'm not the crypto expert. but I will tell you that I've started resuming my little once a week $100 of Bitcoin. If the whole thing goes up in flames, I'm not worried about it. But I think long term, there's probably something there. But there's so many other better crypto channels out there. I won't bore you with my simple theories. All right, top 10, smart to live stream. When Meet Kevin gave up, did he give up on live stream? So I was so shocked. So I watched a lot of Meet Kevin, particularly last year. Now, I didn't buy some of the stocks that he, the lemonades and whatever. I'm sure I had a couple because I don't know if he ever liked DraftKings, but I have DraftKings, Palantir. What else is sort of a no profit kind of stock that I have? I mean, Square, man, they're kind of hit or miss. They have profits, but as you can see right here, oh, we're on PayPal. Never mind. Long story short, Matterport, stuff like that, I never did get into. I've never been, as you guys know, super big on the EV space. I'm glad that Tesla's in the QQQ, which I'm, of course, been building up quite a bit over the past 3 or 4 months. So anybody in the EV space that succeeds will inevitably make it into the QQQ. And Tesla, of course, now is in the top 5 or 6 positions. So there are some things like, even though I don't buy EV stocks on this channel, if something does incredibly well, I will eventually get exposure to it. But of course, I won't be the story of I bought Tesla at $20 and now it's whatever, 1,000. All right, Lion says he bought PayPal and Facebook yesterday. Lower the cost basis. We're in the exact same place. I don't own Facebook, but there's another QQQ that I'm rooting for them. You know what I mean? And if you're new to the channel, I have individual stocks, but I sort of went into this first half of 2022, and I'm like, as these earnings started popping, I was like, man, it's getting hard to see a pattern of who's winning and who's losing. I do believe that the broader market will win. I'm not nearly as concerned about stock market crash, interest rates, inflation. I don't think those things are good. I just don't think it's the imminent doom that a lot of people were preaching in January. So I put my money where my mouth is. I put it on QQQ, which everybody said, of course, is the most at-risk sector. And so far, it's playing out pretty good. Now, there's been losers, right? Including one of my own single stocks, PayPal. But there's been the winners. And as you kind of know about the market, as long as you have a good 50% winners, those winners are going to run hard. Losers are going to fall hard. But so far, my QQQ is in a good place. And let's face it, no matter what happens this year, 5 years from now, the QQQ will be worth plenty more than it is today. If it's not, the world has way bigger problems than my stock market account. All right, Uber earnings today. Yeah, so I'm glad you brought that up, Lion. I was going to look. I saved this. This is Earnings Whisper. They're on Twitter. They do these graphs, or I don't know, is this a graph, the image, whatever, each week. And it's pretty helpful. So every week they post it. I try to save it on my computer because it's a cool way to look at it with all these brand symbols. But today's Wednesday, right? This morning we had CVS that was surprisingly shooting itself in the foot. So if you go read the CVS, they basically called out like, hey, vaccine demand is down, foot traffic, we think will suffer because of that. It was weird. Like, I don't think that was such a good idea to come out and say those things, but whatever. I didn't look at Yum Brands. That's probably the only other one. This is a digital marketing agency, Perion, that's worth looking at too. I don't know. Let me just type them in. How'd they end up doing? They've been on my watch list before. I don't own them. Up 5%. but relatively cheap, right? 26 times trailing, and looks like they did, nothing in that I can read. And they topped earnings and revenue estimates. I was hoping somebody would give us the guidance. Blah, 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 blah. These Zacks press releases are terrible because they're computer generated. Anyhow, I won't bore you with it. Look at this company sometime just for kicks. It's not very expensive, and mostly because it's an agency. But you might have seen in that headline, they do have a tie-in with Microsoft. They could pay off over the long term, remains to be seen. But it looks like they had a good earnings report. Uber, just like Lion said, and then of course Disney. And with Disney, we've got, obviously everyone's going to be, just like Netflix, like getting out their fine-tooth comb on the subscriber numbers. I'm a little more concerned, or not even concerned, I'm a little more interested, not so much in user signups, but just consumption of streaming content, because next week, guys, is the streaming show. So Roku comes out, and all the people that are tied to Roku and their advertising, right? So I own Magnite, which is a very small sell-side platform. There's a lot of people in Pubmatic. There's a lot of people in Trade Desk. If I remember correctly, all that stuff is either next week or the week after. So I don't own Disney directly. When I did a video on them, call it 5 days ago, when I put the numbers together, I'm like, maybe 120 if you wanted to start a new position. Now the market has turned here, so that 120, I don't know if you'll see it. But if you do get an opportunity at 120, keeping in mind that the parks are going to open full capacity at some point, right? In America, I imagine they are, but I think 120 for Disney is a hell of a price. And if I was an existing shareholder, I'd probably add a couple shares there if it got to that. And if I was thinking about a new position for 5+ years, gosh, I don't know how you could go wrong. Probably even at today's price. Where is Disney today? Trying to get a feel for their sentiment. Oh, and see, they're up. So that's a good sign if people know things that we don't know. They are way above their 140 now. I kind of liked it at 120, and I don't know if you'll ever see that. You got 130 on Jan 24. Anyway, keep an eye on it. It'll be an interesting earnings report regardless. Twilio, a lot of people watching that. I'm not in on Twilio. It's a phenomenal company. It just doesn't have any profits. So it sort of is a rule breaker for me, and I'm not investing in unprofitable companies. Just to be clear, I already own some unprofitable companies, so I don't want to be a liar here. This year, I'm not adding positions of companies that do not have a profit. And as far as the ones that I own, aka DraftKings, etc., I probably will do some small buys to lower my cost basis because they got tanked. But I'm not buying new, and unfortunately for Twilio, I don't even see maybe 2022. Their average estimate is minus a penny. I mean, that's right on the hills of profitability, but it's not enough for me right now. How's that revenue growth projected? So this is hell of a revenue growth, and they're in the billions of dollars. Unfortunately for me, it's a rule breaker, so I can't. Uber earnings, end phase. So it's kind of a bane of my existence here. I sold out of end phase. I was waiting. So I've had plenty of opportunities to get back in. A lot of people criticize the move. This 120 price was really attractive. It just, I just didn't think that it was safe with the stuff I'm seeing in solar about legislation and the kickbacks to homeowners, particularly in California and Florida. All that stuff's up for debate, but they did crush their earnings, period. They crushed their earnings. I believe I sold out at 120. So I would have loved to buy it at 120 if I had an infinite supply of money, and but I don't, and I didn't. But if it would have went down to like 99, this is a company that'll generate non-GAAP in the neighborhood of $3 a share. So you figure at $90, you're at a 30 on your forward PE for this year. That is still pretty high for solar. So let me just show you something. So Yahoo hasn't updated. This says as of 2/8/22, which was obviously yesterday. 49 on their forward PE. Nice PEG ratio. But look at your other option. Oh, let me show you one more thing. 38% growth, 29% growth in revenue. Now look at this company that's bigger and has about the same growth pattern, 34, 38, more earnings per share, and forward PE of 34. So I don't know. I could flip a coin on Enphase and SolarEdge, and as far as which one is fundamentally a better deal, and that's why I could never quite pull the trigger on Enphase again. NASDAQ reaching almost plus 2%, so big time. John based out, so he left a comment the other day, which was awesome. I can't remember what video, but he was like, pray for me. I invested in Castor Maritime, which is a shipping company. I forget what you call the sea freighters or whatever, ocean freighters, and it's a penny stock. And John, I'm rooting for you, man. 16.7%. These are kind of funny, these ocean freighters. And you see that chart, holy cow. So typically with ocean transportation, and I don't know Castor on the back of my hand, but I'm going to tell you that I've invested in some of these before, way back in the mid 2010s, 2015s. In the past, what these companies, they have a ton of ebb and flow to them because they're all based on contracts. So the one that I was in a lot of was a company called C-SPAN. I don't even know. Looks like they're not even around anymore. It was a Chinese company, and they're gone. And that's what happens. So it's all booked on these contracts and the availability of their ships. And it's literally a good times and bad times proposition. So if C-SPAN at the time if the economy was going well and C-SPAN booked a new contract, I'm just going to make it up and say with FedEx, stock would go to the moon. All right. And these contracts are not like 20-year contracts. They're like, hey, we have 17,000 parcels that need to go to Los Angeles, and boom, they're going from sitting on the beach doing shit to working hard, making money, and they're always very low PE ratio, and the larger ones are very, very dividend heavy. So it's almost kind of like you're investing it's almost like you're a partial owner of the company, like for real. I know we say that about like Apple stock and stuff, but it's literally like distributed profits through dividends. And at any given moment, their contracts could dry up or the supply chain could get messed up for some reason. And they go, they don't go to zero, but they go down. They go to like an intrinsic value of like the ships and the ports and all that other shit. So anyhow, shout out to John. He got in this Castor Maritime. I can't sit here and lie to you and say I think it's the greatest thing since sliced bread, but I was laughing with him on the comments because look at this. P ratio 367, And you just have to go through the news on these. That's what the game is. And that's a penny stock game in general. It has nothing to do with any of this, as much as I wish it did. It's all down here in these news items. And you see how they do, well, this one's an earnings report. But you see how it's Global Newswire. So those are company-issued press releases, okay? 9 times out of 10. So right here, this one, 2 months ago, vessel acquisition and new charter agreement. They're happy that they did this, but the only reason this thing's on here is because they printed the news release. And every shipping company does it. They're trying to generate interest. And I'm guessing John, and he says, by the way, he bought 2K shares at $1.18. And so now he's up to 172. Yeah, so it's interesting. I don't know if you threw in there, John, what's your exit point, right? Because that would probably be the game here. That I don't know. I guess if it was me, as soon as you double up, you have to start thinking about it. I don't know if it'll get there or not, and that's the catch, because as soon as it drops, it's going to drop hard. But good luck to John, and it's going to be a market like this where I'm not promoting this stock, but I'm going to say we are going to see, even outside of penny stock world, right? We're going to see, let's see who's on the front page here. Little onesie, twosie, small caps are going to explode on news. And how long do they go? Here's one. I'm not saying this one's going to explode, by the way. I'm super nervous to say anything after Meet Kevin screwed everybody. But I've watched this company for a long time. They make basically electronic door entry systems. So key code pads and shit like that for rental apartments. I think that they have a residential line as well. Tiny, okay, tiny. Let's see what if they even have analysis. Revenue of 40 million, but look at this year, projected to triple. But they're gonna live and die on, here's your Global Newswire, all these stupid things that they submit, like, hey, we got let's see here. These are just best-led companies. Third quarter. I wanted to find one that says, Latch signs on with New York Housing Authority, right? Some sort of contract there, and a stock like this would go bonkers for that because it just doesn't take a lot of money to move the needle, right? You could sign a $5 million contract that a company like Apple would not even discuss, and that's plus 10% top line for them. So I think we'll see a lot of that this year. If you're in the mood for swing trades and stuff, which isn't really my forte, make sure you're following, like you're in the right channels to get that information because it's going to be a news release thing. I'm only using Latch as an example to demonstrate things that I've learned over the years on how some of these things operate. Funny enough, look at that. Latch is actually in Morningstar, which is surprising because it's not even $1 billion in market cap. Anyway, all right, let me get a drink here. And we've got top 10, 10x coming in 5 years. Which one are you talking about? Top 10? Or maybe, I don't know if top 10 is talking about Castor or if he's talking about Facebook. Takes time to understand the company, even for me. Okay. De La Sauce. How far can PayPal go from here? So I bought some today, Delo. I bought some 10 shares at 120-ish. I have my fair value or my reasonable fundamental value is in the same position as Morningstar at about 150. I think I think that's where Morningstar is. Yeah. So you're under fair value, and I don't want to make empty promises. I don't think there's a rocket ship to the moon here, but I will say long term, it's a decent investment. And I think that, like so many others, I'll put Facebook in this category. Hell, I'll throw Netflix in this category. The downside risk has been minimized. Doesn't mean it can't go down, but just like Facebook and PayPal in particular are very unique because they have huge amounts of cash flow. All right. And so I don't want to say bottom's 120. I would say it's a very fair entry point / double down point if you're interested, in my opinion. All right. Man, Mr. Mugai shorts a lot of stuff. He just shorted Uber. Okay, right before earnings, Uber, one of the big ones. Somebody was just in Uber. Lion, I think, kicked off. I don't know. So I don't short a lot. I don't short, actually, period. I think it plays against the odds. However, what do we got? So we're going to close out fiscal year 21. I'm going to switch over to SeekingAlpha so we can get a better read on this. And let's look at here's what we got last 90 days. Revisions up over the last 90 days, we have 1. Revisions down, we have 8. 88% of analysts have lowered their revisions. The consensus is minus 29 or minus 33%. I don't know if they report in GAAP or non-GAAP, no idea. Here's last quarter, big miss. For some reason, Q2 of 2021, they actually hit 58 cents. That must have been an anomaly for some reason. They did beat last fiscal quarter 2020. They hit? Yeah, they hit. Beat by a penny. So let's try to figure this out. Fiscal quarter 2020, they were minus 55 cents. This year, hopefully they're getting more profitable. As you see, that they're calling for minus 33. I don't know. I would say it's a nail biter. And I think like the catch with Uber, like everything else we see on the market today, Mr. Mugai, is the guidance. And it won't be so much like hit or miss. It's going to be, what do they say at the end? If they say, let's just say that in New York City, that ride shares are up 50% year over year from the same time period, and we see that increasing as vaccination and COVID, blah, 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 then they're probably going to go up. From a valuation standpoint, I've thought about this, but I like Lyft a little bit better. And actually, that's a great place to start. And I'm sure Mr. Mugai has already done this, but what did we get out of Lyft after their earnings? Let me read real quick. Okay, so this morning, was it this morning? No, Lyft was yesterday. And at least when it was reported, adjusted net loss, revenue beats by 30. And then there's another headline on here that talked about which way it was going. Lyft falls. So this one came out at 7 a.m., so right before market open. Fell after disappointing Q4 earnings that featured the company's active riders count and EBITDA missing the consensus. On the positive side, Lyft generated its first positive EBITDA. Elsewhere on Wall Street, somebody cut their price target on Lyft to 54 from 80. Shares of Lyft shed 4%. So if you had the exact same situation, if you were shorting Uber, it looks like, and I don't know how this works. I'm not the right guy to ask this, but I'm going to put up the 5-day. It looks like if you can sell it after hours, because they were down, according to that headline at 7 a.m., they were down roughly 4%. Now they're up 6.5%. So I would say finger on the trigger if you're doing a short and get what you can and press the button, because if there's any positivity in there, this is how this stuff rebounds. Again, taking advice from me on a short-term short sale, there's much smarter people than I am. All right, Lion says, 10 years from now, you'll thank yourself for buying PayPal. Absolutely. I agree on Facebook as well. These two gems are trading below fair value. Great discount. Super happy. And Lion's also got Alibaba, which I believe we came to the conclusion, Derek's not here today, but I believe we came to the conclusion that Alibaba earnings were on the 15th. Let's see if they've posted it yet. God, why is this so hard? And they haven't posted it yet. If that's off my memory, that Derek had looked it up. But I'm not going to go. And we'll see what Yahoo says, and then I'm going to give up on it. They're saying between Feb 8th and Feb 11th. Anyway, the Alibaba report will be very interesting, and it'll go across every Chinese tech stock that we know, right? And that's not like, I don't think that's a huge assumption. Like, it's going to have a ripple effect, and it's going to be interesting how it affects everything. There's a lot of untapped money in Alibaba from a valuation perspective, but it's just like, what are they going to say? They're not going to talk about the government. We're well into the Olympics now, and so far, not a lot of political movement that I've seen, that I've noticed. So it'll be interesting. Chris, you're asking about Upstart. I don't see why it's so highly valued. I guess I'll leave it at that. It's off my radar, even though it is profitable. If they hit, where are they at? Feb 15. So if they do hit at $2, and let's just skip ahead to next year. Let's pretend that this is $2.50. All right, you're still going to be in the 40s, 50s on a forward PE, if they're even aligned with that number. My advice on Upstart would be also to read a little bit about the company and go read consumer reviews. It's a different story on the ground from consumers than it is in the investor chart. So I went down a rabbit hole one day, probably a month ago, because I happened to get a Facebook ad for Upstart, like whatever, refinance your house or, pay off credit cards, whatever it was. And I was like, all right, let me just dig in and see what's going on here. And the comments were very negative, and I was surprised. So that's not exhaustive research, but it was enough to point me in a different direction. Just to leave it at that. All right, Lion with first overall pick, stock market draft, DC Insiders select. Oh, another Nancy Pelosi. I think she's on board with it all, though, isn't she? The last I read, Pelosi, the stock trader, said, yeah, take it away from us. And if you get, so I don't want to go super political here, but let's try Reuters. See if we can get there's the trucker protest. Our friend Lion on the chat, he's from Canada. He's in the middle of this. Well, he's not in the middle. I assume he's not driving a truck. I wanted to see the latest headlines on the stock thing. But as I read it, and you guys will have to check yourself, as I read it, the way that thing would happen. Let's see if I can get a freaking headline. Congress stock trades. Here we go. All right, let's get some details here. Pelosi green-lighted a plan to ban members of Congress from trading stocks. Blah, blah, blah. Several versions are under consideration. This is your key. If the way I read it is that they would still have money in the market, what types of investments would be prohibited? It would be in some sort of trust, right? So they could still essentially make money off of it in the same way, but they could hide behind like the trust, like they're not supposed to do it, right? But you cannot even try to sell me for a second that if you have ties to the trust, like you paying somebody to do this trust, right? They're not doing it for free. And all you have to do is tell that person what you know, and then they execute the trades, and you may not exactly get to log in and do it, but I'm not buying it. I mean, I think it's a fluff kind of thing, but we'll see what happens. All right. John says, do you think market dips tomorrow? So tomorrow's that CPI report. Let's see if we can get, actually we're on CNBC. So this is supposed to be the inflation report. Let's see if it says anything about it in here. I wanted to see when it came out. I assume it's in the morning. Yeah, nothing. CPI report this week, February 2022. I like to switch to this news tab, by the way, as a hack for you guys so you can get through who does what. Euro up ahead of the CPI report. Due on Thursday. What time? The readout is expected to show 0.5% month-over-month increase in January and 7.3% for the year-over-year. And what time? Nothing on the time. Typically, some of these things come out in the morning, but I don't want to promise you. So the expectation, this is all relates to John's question. Expectation is that it is a bad report in the sense that it shows that inflation is rising, right? And there won't be another Fed meeting of substance until March. So what the doomsday folks want to say, they want to have this time period, right, between whatever tomorrow is, 2/10, February 10th, through the next Fed meeting, that they've got all this inflation data and the world is coming to an end and there's basically nothing we can do regarding interest rates until March. That's the doomsday scenario. If that gains any traction through the report or through the media, then the market will go down. If we wake up, read the report, and it says anything short of expectation, which we just saw in that article was a lift of 0.5% in the month of January, I think it's just a normal day, is where I've got it. But we'll see. It's so sad, but it's unfortunately tied very strongly to the interpretation and the further promotion of the headline from the news agencies. So I'm not picking on anyone specific, but there's Yahoo Finance, there's CNBC, there's Reuters, there's Market Watch. All these people are going to take this, and we know that negative sells. So if they can pin it down as negative. That's how they'll make their headline because they're doing it for clicks. And then we'll see if the market absorbs it or throws that snowball further down the hill, right? And says, oh shit, yeah, we are. Oh, inflation, we're dying. And then we'll have probably a bad day. And I closed my stupid earnings thing to see who else was reporting. But hey, I'm going to switch over. I got two things to show you that are, I think, interesting anyway. Let me keep Disney here. It's only 4 o'clock, so we don't have this data yet. These headlines are not, they don't have information, they're previews. But this is a cool tool that I literally discovered today in SeekingAlpha. And of course, you guys probably know that I promote SeekingAlpha through the affiliate program and helps generate some money for the channel. But outside of that, if you're interested in a discount, there's a link in the description. But I was thinking to myself, you saw the title of this live stream was Winners and Losers, right, of earnings. And I came to that title based off of this tool. And it is trailing 30 days. So you would have had to report your earnings in the last 30 days, right? Makes sense. And then it's sorted by post-earnings change. And then you can go through and pick out certain sectors, right? So if I wanted, tech is always one of my top interests. And so who won the most in tech past 30 days, 1 day after their earnings report? And it is, at the top, it's going to be some of these rinky dinks that I don't even know all these, Bill.com, who actually missed for some reason, but you could click on this and dig in. I'm not worried about them. Snap, big winner, 21%. I don't know if this has held. So this is one thing I want to call out real quick is in order to see this 21% is 24 hours after Snap reported like last week, right? So did they hang on to it? Let's see. Let's do 1 month chart. Looks like it. So if this was the 21%, we'll just assume that's right. And they still run after that. So that's kind of a cool tool. I thought anyway. It's a lot easier if somebody asks you who's doing good in with earnings. And if we go down the line and look for some names that we know, Google, they went up 9%, but of course their shares are $2,700 or whatever. So that's a big 9%, right? That's roughly 270 bucks. Then you have Atlassian, if I can say it. They had a big win. AMD, big winner. ServiceNow, Apple. Who else we got in here? IBM. I feel like I should know XM, but I don't. Qualtrics. Amazon +5. Logitech +4. EA Sports +3. And then you're down in the threes. Now let's go to losers. Technology losers, and this would be the one that I honestly would be much more likely to look at because, I kind of feel like the gainers is gone, right? Like you were either in that or you weren't. And, I suppose you could, like we saw Snap had another $5 in it, but my brain works better in this format, which is who's gotten their ass kicked and is there anything left for me for the long term. And obviously Facebook, we've talked a ton about Facebook and Lyons shared how he's bought into it. Spotify, they've got a lot of stuff going on in their world, so that might be one to look at. What's Light? Lumentum, I don't know them. UI, Ubiquity, some of these I'm not even going to pretend. Skyworks. So I follow Skyworks. It's a great company. But it looks like they missed their gap earnings by 26 cents, which is basically 10%. However, they beat on the revenue side. So just as an example of something you could do is you would take your Skyworks, see, oh, look, it made the leaderboard of losers. How did it do? Okay, we got this. Now, where my brain would go is why, right? Here's the news, why, and what's the guidance. And usually, in Seeking Alpha, you can go to the news column, select earnings, and get an idea. Outlook. This is probably what killed it. Let's see. Based on new product ramps, diversified portfolio, we expect double-digit year-over-year revenue and earnings growth. Okay. Specifically, blah, blah, blah. Non-GAAP earnings of 262 versus 260 at the midpoint, representing revenue growth of 13.5. Doesn't say what the expectations were there, but just eyeballing this, if it really did go down and did it keep that level? No, it's already bounced. Okay, so I'm guessing here's your minus 9%, and now you're back up. But if you're on this tool or something like it, and you saw that, oh, let's look at Skyworks, it's down 9%. I don't read a whole lot in this thing that says bad news, right? And I'll also say Seeking Alpha is one of the few places that you can read the comments, and they're, some of them are dopey, right? But how about this? 50% of the comments are actually insightful. So even this guy, great balance sheet, they could make an acquisition. I don't know if that shit's true, but at least it's not like to the moon or crash and burn, right? And these people go back and forth. So interesting little thing. I'll go back down. These losers, where were we? Skyworks, ADP, they do like payroll, I believe. Western Digital, Liquidity Services, SAP's been in the game for a long time. Anyone else on here worth looking at? Nothing, but this is just technology. So let's take a look at one more. Let's do the losers in communication services. FICO score. Oh, those are gainers. I want losers. Services. So Skyworks shows up in services too. We know about Netflix. What's LVS? Okay, casino, Las Vegas Sands. And that was about it. Allegiant Travel. Anyhow, you get the point. My brain is like I want to read all these. If you fell double digits after earnings, I want to know all about it if I have an interest in it. Because just like that Skyworks headline, which is a stock that I follow, but I don't read every single stupid thing that comes out about them, I would have been inclined to say, reading that report right there, if I read this right after earnings and it dipped, I'd be like, gee whiz, that doesn't sound so bad. And sure enough, over here, so this was February 3rd, 4 p.m. is when they reported, and look at that. Feb 4 got down to 130 from 148, and now here we are, rolling back in. So if I was, the past is hindsight, of course, but if I was smart, I would have gotten a hold of this one right on the heels of whatever disappointment people were thinking, and you just added $10 to your shares. So anyway. All right, more questions. Oh, let's check on Disney. See if they got it. Boom, right here. Non-GAAP, $1.06 beats by 43 cents. Revenue, $21.8 billion, beats by 860. Shares are up 6.5%. Disney Media, 14.5 billion. Disney Parks, 7.23 billion. Disney Plus subscribers grew, well, I think this is the total. Disney Plus, so they have, I guess what they're saying there is that they have 35 million more people this Q1 as opposed to last year. So I don't know what that means on the actual math, but very interesting. So good quarter for Disney. There's almost no way now that you'll see my $120 price target anytime soon. So congrats to all Disney shareholders. You're back to 160. And you'll have to dig through the earnings report, see if you think that sticks. Let's see if Mr. Mugai's still around on Uber out of curiosity. Uber, GAAP EPS of 44, beats by a lot. Revenue, not too bad there. Shares are up. We're pulling for you. I don't know if you're going to get that short. But I do hope it works out for you. And you never know what is immediate good news, to try to keep the glass half full here. What is immediate good news could be broken down in the earnings call and whatnot and turn into negative news. So for purposes of Mr. Mugai, I hope that works for you. All right, riffraffs here. What do you think about Apple Pay? Will it hurt PayPal, Square, Shopify? I'm not super concerned, only because, so the Apple Pay, here's what's going to happen at the POS terminal for a lot of things. There's just going to be more choices, right? And now some small vendors, so I'm thinking of like the guy who sells the t-shirts at concerts and whatever, who's an independent, maybe he's working straight off of an iPhone and you have to, coordinate with him that way. But I can't imagine a scenario where this Apple Pay or whatever it is that has your credit card in your phone, and supposedly at some point you'll be able to tap your phone on the POS, right? There's no way that a restaurant, for example, where you're still handing people cards 9 times out of 10, there's no way that the concert stadium or concert hall is going to take that without having a bigger POS system behind it. So it's not a POS system. I'm not saying Apple can't make that, but the back end of POS systems, if you've ever worked at the mall or any place and you've run the reports, and I have an e-commerce background, so we have a lot of like cart checkout, right? Obviously you can't fucking tap your card and cart checkout on a website. So it may eliminate one side of fees for people like Square and PayPal, but I just don't see it as a huge game changer. Certainly not in the first 3 years. Maybe the world advances past that. I don't know. I've said before with Square, Square, if you look at Facebook going to Meta, Square going to Block, there are two different things that those companies are going into, but Square is going blockchain, Bitcoin, man, like in a major way. And so I don't even know if they give a shit about POS anymore. Like if you just watch like what Jack Dorsey's doing and what, I think they did launch that Lightning Network, which I'm not the guy to tell you much about that. Hold on. It's not in here. So Square is trying to add the Lightning Network, which in short would supposedly, not the expert, supposedly make it easier for me to pay you in Bitcoin, right? For itty bitty transactions. Like let's say I mowed your lawn and you paid me that way. That's where Square's going with Cash App, with the stuff. That's where they're investing. And their POS was where they started. Cash App changed the company because it kind of showed power of the people, power of fintech in the common person's hands. Now they're going on the crypto side with it. So don't, if you believe in Square, two things. If you're a Square stockholder right this second and you don't believe in Bitcoin and cryptocurrency, you better GTFO. Okay, because that's where they're going for sure. Does not mean that they're giving up on POS. I'm just telling you where they're going. All right, and so that's point number one. And number two, with that, things like tapping Apple Pay or whatever Apple's doing are going to have a minimal effect on the future of this company. So that's kind of why I think it's a nothing burger. And I will say that probably holds true for PayPal too, which, PayPal, even with Venmo, they're much more rooted in e-com, where you're not tapping to pay for shit, okay? That's just my take. Now, on the bright side for another stock I own, which is Visa, Apple Tap to Pay is rooted in what? A credit card. Just like I have a Google Pay, I'm an Android person, so I have Google Pay, and my Visa Amazon Rewards credit card is tied to my phone, and in some instances I use it to pay, but ultimately it goes to Visa. So some of this intermediary stuff that people freak out about, I don't see it. I don't see it being worth worrying about, certainly not right now. All right. John asked, what do I look for? Identify a stock that will outperform. So I do fundamental valuation in the sense, like, first of all, I'm looking for something that's not ridiculously expensive. So not one for momentum, really. And then my core of what, like, the perfect stock for me is something that's going up plus double digits, both top line and bottom line. So you saw, I'll do another quick example. Let's see what Skyworks is. I don't know if they're going to be the best example for this. But here's what I want to see if they have it. Earnings estimates, annual. All right, here we go. This is, okay, good. They're going to exemplify this. September 2022, fiscal period ending. So prior to digging in deeper, I want to see your profit, aka EPS, double digits. Skyworks hit that. Okay. Now, granted, this is a projection, so you have to dig deeper and figure out, like, how real is the projection. And then in this case, you got a forward PE. You'd have to compare that with similar companies, but you get the point. Now, how about the top line, which is revenue? Revenue projection, $5.66 billion plus 10% over 2021. So in this case, Skyworks is a qualifier. This is mildly disappointing, not necessarily for Skyworks, but the more that you have a projected growth rate that goes years out in the double digits, the more likely you are to survive haircuts, right? So let's take a look at PayPal, who is an example of a company that has seen their projections get cut. And it would have changed the way that I look at it had these numbers been this way prior to me buying it. Okay, so December 2022. This year right now, the projection is 467. That's only 1%. So right off the bat, that is a red siren for me if I didn't own this stock, because what do we know? We know that if this EPS doesn't go up very much, then the PE doesn't change very much, and so there's not a ton of room for price movement on the fundamental level. Meanwhile, in 2023, we're getting to where I want to be, right? Plus 25% if it happens, and you see what happens to the PEs here. Now, Revenue side, PayPal's just fine. Double digits, double digits, double digits. And you, frankly, anyone who writes a thesis on a stock and talks about 5 years from now, I think is wasting their breath. The best you can hope for is identifying 24 months in advance in terms of revenue growth and certainly EPS growth, which this can drop on a dime with an acquisition, stock buyback, yada, yada. There's a lot of reasons that this can change. And I'm hoping on the PayPal side, I'm deep in it, so of course I'm hoping for good things. I think that they should consider a stock buyback here if they don't have any shiny objects, and that will help boost this artificially. We'll see. They have enough cash to do it. I just don't know if they will. All right. Hopefully that helps, John. But most of my stuff is fundamental, right? So when it comes to like the headline, just to piggyback on that a little bit, numbers first for me, and then headlines. So the headlines create the momentum, which is what we saw in pandemic time. Somebody Rivian or somebody says they've got this truck and all this stuff, and boom, the stock goes up. I would prefer to see the numbers first, and then if a headline comes out, I make my own decision on when that if and when that will affect the bottom line or the top line. Because a lot of these headlines, how about Apple Tap to Pay? A lot of these headlines, they're probably 2 to 3 years away from being anything, right? They're just ideas. Like even PayPal launches crypto, like that's interesting. I don't fly out of my seat and bang on the keyboard to buy more on that news. Like it's like, okay, well, they're remaining relevant should the crypto game take off to places we can't imagine. But in the short term, that's not, I'm still rooted down here before I see what happens. All right, Lion DWAC. I think that's the Trump social. I'm not going to get into that game today. Where are we at here? And actually, I've got about 5 minutes. I lost my spot in the comments. We are on Riff Raff talking Apple Pay. We already did that. It looks like Lion and John are on the DWAC. Good luck to you guys. I know nothing about it. Top 10 says 25% of my portfolio, almost a 6-figure position. I firmly believe it'll 10x. Good for you. And fantastic job to all of us, regardless of how you're performing over the past 12 months, right? Assuming you didn't do call options that failed and you have $0, any one of us who's buying just about any stock with any sort of growth to it, you did the right thing, right? This stuff is going to go up. You're saving money. And for those of you who are new, the biggest unlock that you're going to find with stock market investing is assuming that you try to stay away from volatility, okay? And so you don't want to lose, like I lose in PayPal, suboptimal with that to go from 190 to 120, but it didn't go to 0, right? And it's just going to take time to get back to 190. But once you start getting into 100,000, 200, even 50,000, I'll go backwards. Even at 50,000, you have buying power. It's considered margin. You could roll it into stocks and take some chances there, but you can also borrow against it. So the days of filling out a loan application because you need $10K to pay off something that you didn't think, a medical bill, whatever, boom, you've already got the money. You don't talk to anyone. You just do it. And that is the power, and you do not get that with a savings account. Arguably, you get it with a checking account, but I don't know why you'd want to have 6 figures in a checking account, but I'm sure somebody does. So we should all be patting ourselves on the back for the grind. And it's stressful sometimes, but the savings element over time cannot be beat. And the flexibility that you can bring your family by just having money saved in stocks over time is gigantic, right? And if you don't know about single stocks, which I don't blame you, because I'm doing some QQQ for this exact same reason, go buy the ETF, go do the SPY, S&P 500. Like, who gives a shit? Just put the money in something where you can't spend it on basketball shoes and rims for your car and whatever else is cool these days, right? All right. No brainer, the way our work as physicians are heading. Okay, I missed that somewhere. Riffraff says, think Apple, Google, and Microsoft are the best. I'm not going to argue that. Lion, Berkshire, that's a good ad by Lion. And good old Warren Buffett. I'm so glad that, hopefully he's around for a while. But all the trash talkers from 2 years ago, I'm so glad that his stuff bounced back. He doesn't need the money. But I'm glad he gets to do one last, peace out in the rearview mirror, right? Will you be here for Disney earnings? I think we covered them. LMT doing well for a boring stock. And yes, it is good to have stocks like that in your portfolio. Lockheed Martin, yeah, this is more or less a dividend, but this is another good example, to Lion's point, of a stock. Let me get to the summary page. 2.85% on today's price. This is your 1 year view. You started at 3-ish 42. You had your ups and downs. Now you're at 394, plus you got 3%. And that money is saved in your brokerage account. And let's just pretend you had 100 shares of it, which would be a lot. You'd have, is it right that you'd have $400,000? Okay, that's a lot. I don't know. I don't have that. But boom, it does more for you than just holding the stock. Not going up 3% next year isn't the end of the world with LMT. You can borrow against it. You have the sanity that it's there. And in the case of LMT, you're pretty, I don't want to say never, 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 but you are 90+% that you are not going to lose money over an 18-month horizon. Okay, you see the dips here, right? Let's see, this is 5 years. 5 years ago, roughly 265. Lot of good headlines, lot of bad headlines, right? But where'd you land? 396 plus your dividend, investing in missiles and defense systems that, by the way, have to be renewed every single year, right? Because missiles get old. I'm not the expert here, but defense is always evolving. They're gonna get the next contract. That's just the way it is. So this is a great example of a stock for what are you going to do? Why would you ever sell it? Just keep it. And if you get yourself at a bad spot or something, then that money's there. And in the meantime, it's making money for you. Lion, I thought I saw Uber did well. There's Derek Ridlin. With all respects, but PayPal is the new Nokia. Woo! Ouch. Well, I'll tell you what, I'm not in a position to talk any crap about PayPal right now because Scoreboard says, yikes. But I'm doubling down. Double down's a tough word. I'm adding shares at this price. I'm not going to replicate the other 80 shares that I have. Disney, we covered Disney. But if you're new to the channel or new to the chat, right there. Disney jumped 7% after parks lead easy earnings beat, streaming subs impress. There's your Disney. Good news for Disney people. Lion should have bought Disney at 130. I'm with you. You were going to start, Riff Raff was thinking about Disney too, but it doesn't, as much as it didn't work out for us, because I was eyeballing it at 120, that it never hit, it didn't work out for us this time. But let's be honest, guys, if they came out, they came out with a great earnings report. The flip side of that is the stock could have went down to $99. So I don't think we can be too hard on ourselves for missing the opportunity, because we know what happens when people get spanked in this market and miss like a tiny thing. Let's see. I'm going to have to jet here, guys. Let me see if I can pick off another one. Ford. I like the trajectory of Ford. It's down right now. I haven't looked at the fundamentals of it for a while. I probably should do like a video on Ford, but I think it's an interesting EV play. It's a very inexpensive stock, so the risk for Ford, I think, is limited. Obviously, the chip thing is coming into play. Sergio's in talking about Twilio, which we looked at for a second. I mentioned it wasn't one for me because it wasn't yet profitable. However, to Sergio's point, non-GAAP EPS of minus 20 cents beats, revenue beats by not quite 10%, shares up 9%. It's a good company, man. I mean, they are ramping on the revenue side. For myself right now, I need to get more bottom line. Uber to the moon. Thank you, market gods. Good for you, Lion. Congratulations. Sergio's still adding to Facebook. He's at 260 and holding for 5 to 10 years, which I think is the most important thing. Now I was thinking to do a swing trade with Uber, but now I'm thinking, why not hold it? So Lion, I mean, if Uber is going to perform well as a company, you would have to imagine that effective March 1st, unofficially spring into summer is when it's going to ball out, right? Concerts, all the things that people get out and do. All right. And Mr. Mugai, you did turn profitable on the shorts. Good for you. I was actually a little worried about you there for a second. Wait until they go profitable is what Derek says on Uber. And I think Lyft will be GAAP EPS profitable before Uber will. Twilio up 29%. Let me see this. It came down just a little bit, but still quite a beat. This is what the interesting stuff is going to be when you get into these, just call it high-flying tech, unprofitable tech, the ones that we've all been, saying. Basically, guys like me and other people like me in fundamentals have said, like, oh, of course that stock's down, X% because it has no profitability. Obviously, the ones that hit those earnings are going to crank. The catch is who doesn't hit, right? Like I always say Cloudflare or CrowdStrike because I really do follow the stocks, but I haven't bought them. What if they miss? They're already tanking now to more reasonable levels. What if they miss? And then what happens to those stocks? I don't know. If they went down far enough, I'd love to say I was going to buy them, but without the profitability, it'll be hard. Big day tomorrow. Let's go Bulls 2022. We run the show. I love it, and that is an excellent place to call it a day for me, guys. Thanks, everybody, for coming. I hope you had an up day. I had an up day today. It was nice to have it. Get to that CPI report in the morning, so fire up your phones in the morning. Not for me. Check that headline. I'll give you a pretty good idea where we'll probably land for the day. So anyway, guys, thanks for joining. Good to see you, and we'll see you on the next video.